Welcome to Nasdaq TradeTalks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq. We're coming to you live from Mainnet 2023 in New York City, and joining us for this segment, we have Tyrone Lobban, Head of Blockchain and Onyx Digital Assets by Onyx by JP Morgan. And we're here to discuss the ways JP Morgan is thinking about public permissionless blockchains. Tyrone, it's great to have you with us. Welcome to TradeTalks.
Thank you for having me.
All right, tell us about Onyx.
Onyx is JP Morgan's blockchain-focused business unit. So what that means is we're commercially focused. We're looking to use this technology to actually generate revenue and also obviously save costs for our clients and also for JP Morgan itself. Onyx is structured in 4 sub-business units. So we have our Onyx Digital Assets platform, which is focused on tokenizing traditional assets. We have our JP Morgan Coin Systems business, which is focused on payments over blockchain. We have our Link platform, which is really information exchange and data insights. And then we have our Web3 labs, our launch team that focuses on the things that are going to be important for the bank in the next 3 to 7 years and how we can think about creating products around those. So things like digital identity and Web3 related concepts.
So what use cases are you tackling?
Yeah, from my perspective, high focus on tokenizing traditional assets. So when we think about the Onyx Digital Assets platform, that is really there to actually enable new use cases that can create financial products that we couldn't create before. So one example is on the platform, we have an application called digital financing. This basically allows our clients to borrow from JP Morgan intraday using tokenized treasuries really as collateral. And the interesting thing here is they can actually use a standard repo agreement, a repurchase agreement. But instead of what would normally be an overnight or term settlement duration, they can actually settle those trades intraday. Meaning they can borrow funds for a very, very precise amount of time during the day on a fully secured basis. That could be 3 hours, 5 hours, whatever the case is, and meet their intraday payments needs. So this is a hugely, I think a very impressive step in terms of how blockchain technology can be used for traditional finance, because it offers a real solution to a problem that many of our clients have in terms of wanting to get access to different funding facilities during the day. We then have solutions around tokenizing money market fund shares. So when we think about an asset manager client who's offering their clients a money market fund product, often those clients will need to redeem out of the money market fund to go and post collateral for some bilateral exposure or derivatives, margin call, for example. That's not a great experience for the asset manager nor for the clients. It's costly, it's expensive, there's a drawdown on the investment itself. We have come up with a solution, and that allows for these investor clients to stay invested in the money market fund and actually post those shares, the money market fund shares, as collateral. Better experience, much cheaper for the client, not a drag from a balance sheet perspective. And we think that this idea of leveraging blockchain for the collateral industry is really, really important because of the size of that industry. And then another one that we're actually stepping into right now, early stages still, is private assets. So tokenizing alternative investments and thinking about how that can actually simplify the post-trade processing for alternative assets, which we think can actually enable more investment into alts.
What are you seeing in terms of momentum as it relates to adoption?
I think strong. I mean, when I think about our platform, we have banks and broker-dealers that are signed up. We've been public about the fact that Goldman is a client on the platform, DBS is a client on the platform, BNP. So we have clients globally. We have large asset managers like BlackRock. We're doing about $1 to $2 billion a day of tokenized flow through the platform. We launched in 2020, December 2020, and since then we've done just on $900 billion of tokenized trading through this particular platform. So we think the adoption is strong and actually only increasing. We've had clearly since the collapse of FTX some slowdown from a regulatory perspective in terms of their comfortability with actually rolling out new products. So we've been a little bit slower on that journey since the beginning of the year. I think we are turning a corner with them, and I think that that's going to lead to not only the ability to offer new products, but what that will lead to is new clients, right? And so the goal here is grow the network, integrate with other platforms as well, and we think that that can help from an adoption perspective. But everything that I'm seeing is a very strong indicator that these platforms, this technology, the idea of tokenizing traditional assets is really value add. It's value add for our clients. and they see why they should be leveraging these ideas as opposed to traditional technology, because they can move assets more quickly, more cheaply, they can have more utility of those assets, and basically offer new features to their clients.
It seems as if once we get that regulatory framework, that is the next catalyst for true adoption.
Yeah.
So how is JP Morgan thinking about public permissionless blockchain?
I would say cautiously. We actually did this really, really great project last year with the Monetary Authority of Singapore, Project Guardian. That enabled us, and through that project, we basically tokenized Singapore dollars, we tokenized Japanese yen on public blockchain. We used public DeFi protocols to enable, effectively a transaction between two banks, ourselves and an SBI. And that was highly instructive for us because it showed us why having a persistent, highly redundant, highly available global settlement layer with transparency and anytime real-time pricing, price discovery through a DeFi pool could actually be very beneficial to traditional financial services markets. It also showed us some things that we've had strong theses around, but we actually were able to test out in practice that need to be resolved. Things like privacy. We have to have the ability to have private transactions over blockchains. The ability to not be impacted by other activity that's on the network, ensuring that your transactions can actually go through in the timely manner that you actually need them to go through. We also tackled the KYC problem. Obviously when you're on a public blockchain, there's no KYC requirement. When we talk about traditional finance, we have to have the ability to KYC our customers. So we did some work around verifiable credentials, essentially enabling a digital identity solution to provide the ability to say that only KYC'd actors and authorized traders can actually participate in these pools as a way to show how we could get there if we were to take the steps into public blockchain. Very shortly after that project, the FTX collapse happened, and that really obviously brought a slowdown to not only the work that we were doing, but globally across the ecosystem. And so since then, high focus on our permissioned environments. But what I would say is that our strategy is very much that we want to position ourselves to be able to adopt the public infrastructure as and when we can, as and when our regulators are comfortable with it. So all of our infrastructure is EVM based, Ethereum based under the hood from a permissioned perspective. All of our contracts are written in Solidity. We use ERC20s as our token standard for the most part. We're currently doing work to actually enhance that standard. And what this will allow for us to do is, at the point in time where we may be able to do more on a public blockchain, we can lift and drop our applications. We don't have to rewrite them, and basically get to take advantage of the really great work that is happening in the public sphere, and hopefully bring in the controlled environment that we would actually need.
All right, Tyrone, we appreciate the insight. Thanks for joining us on Trade Talks, and thanks for joining me. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.